Hi there, Robert Wolf here with Terra Firma Business and Financial Consultants. I'm an asset coach and tax strategist, and welcome to our YouTube channel. If you haven't already subscribed, go ahead and click the little bell down below in the subscribe button. And if you like anything, the material, the information that you're listening to and that I've been sharing with you, please give me a thumbs up. Add a comment, questions, some great feedback if you can, so that way we can improve the content and the information we provide. Remember, our YouTube channel is for small business owners, and we're focusing on what we call the economic termites: taxes, inflation, time, laws and regulations, and debt. And right now we're seeing a lot of activity, a lot of information from laws and regulations, which, as you may, if you've seen any of our videos or any of our content and information, we're focused on laws and regulations. That's the biggest economic termite that eats away at our wealth as a business owner. The choices that Congress and lawmakers make do affect our taxes, do affect our inflation, do affect the time to build and grow our wealth, as well as affects our debt. So this is the most detrimental termite, and we got to plan for it. And today's article is a great example. It comes from the Wall Street Journal. We're going to see a lot more article, a lot more rhetoric. The administration, Democrats, the House and the Means and Ways Committee starting to build out a plan for the upcoming budget. And guess what? It's going to affect our taxes. Shocking. Seems like since the beginning of the year, everything that has been decided upon to affect our taxes. So we need to understand that. You read between the lines. Look at the game plan. You got to know the rules. You got to know the opponent you're playing against. And here's the issue: is that we're playing against an opponent who is very, lack of a better term, hell-bent on making sure that the quote-unquote wealthy pay taxes. Well, guess what? They are the wealthy. The lawmakers are the wealthy. They're the ones that are public servants earning wealth, millions of dollars on the backs of us. And they're telling us we're the wealthy ones and they're not. Okay? And so we need to understand that. We need to understand what's being decided, and you need to plan. As a small business owner, you need to take action. You need to have a plan. You need to build a plan that protects and keeps your business compliant, but at the same time allows you to utilize the rules that are laid out for you to minimize your tax liability, to protect your assets, to grow your wealth, and to succeed as a business owner, not just for you, but for your employees and for your community. America relies on you as a small business owner. So enough of my soapbox. As you can tell, I'm very passionate as a fellow business owner. So let's dive into this article right now and let's talk about what's going on. And like I said, there's going to be lots of articles that are going to be written about this. And the Democrats are releasing details of a proposed tax increase. Now, caveat, this is proposed, so it has not passed yet. So we want to make sure we're cognizant of that this is just talking. Okay, and now we have found with this administration, there is no smoke, there is just fire. And they have talked about proposed tax increases, raising the corporate tax from 20 to 26.5 from 21%. So that's a 5.5% increase, a 3% point surcharge on top earners and capital gains tax increase. So not only they're talking about increasing it to 26, but they're going to add a surcharge. Get ready for more surcharges, okay? More excise. Get ready for these creative tax terms that is going to attack you. They're thinking that they can raise trillions of dollars from corporations and high-income earners, okay? Lawmakers aren't really smart about the tax code. They just think that if they raise taxes, it's going to increase tax revenue. It's not the case. They don't understand how businesses ran. They don't understand that the cost of doing businesses is going to affect the tax revenue. So they aim to use the money to pay for expanding the social safety net and combating climate change. Well, guess what? The world has always evolved. The world has always changed. It is, if you look at history, all the continents were one, and they show, scientists show that they're all separate. That doesn't just happen as there's climate change. Things change. Things affected. Now, saying that we're a cause of that could be true, could be false. But the idea of that these tax dollars are going to affect climate, what are you going to go to space and fix space? Are you going to fix the sky? Right? So it's a little bit discerning that the ego and what they're trying to use climate change as a reason why they're raising these dollars. No, they're raising these dollars because they keep spending money and they want to keep making money off our backs as business owners. Okay, changes to this estate tax, the 3% point surcharge on people making more than $5 million. So another surcharge of people making more than $5 million. Okay, several tax increases that would affect closely held businesses whose owners pay those business taxes on their individual tax return. Now, we have a business protection program that helps you as a business owner stay compliant. As a closely held business, small business owner, you set up a business entity, LLC, S Corp, C Corp, partnership. You set up these entities for asset protection and tax planning. Right now, the majority of businesses that we talk to, which like almost all of them, are only focused on the reduction of taxes, which your business entity provides, but they're not holding their business compliant by upholding other requirements to keep your business compliant. So the business protection program will offer that. They will have a link of that in our description below. Go check it out. Highly recommend you purchasing this business protection program to protect your business, stay compliant within the guidelines that have been laid out for you. The capital gains tax increase would effectively, as of today, okay, this hasn't even passed, but they're saying it's where the moment it's passed is going to be effective with special transition rules for deals with binding contracts that haven't been completed yet. Okay, Democrats can win votes by strongly advocating that corporations and wealthy Americans pay more. There's no difference here, right? It's the same rhetoric. It's the same conversation. Hey, these people against these people, right? And what's funny is that the Democrats are these people. They're saying that they're fighting for the poor, but yet they're the ones that are public servants. They're making money. They're becoming millionaires. They don't have the same health plans that people have. They don't have the same retirement plans that people have. They have special rules for them that make them poor. Right. It doesn't, we know this. I'm not saying anything different than what you know, but understand that the guides of talking against each other, pitting us against our employees, pitting us against other people in our community is wrong. It's divisive, and it's going to have a very negative effect to what they're really trying to advocate and what they want to do. We seek to help families better afford essentials with the continuation of expanded child tax credits. Okay. So they're for abortion. They're for closing down schools and wearing masks, but yet they want to give what? Tax credits for children. Now they care about children. The investment that will lower the costs of prescriptions and health insurance. Well, how about you have the companies that you just give trillions of dollars, billions of dollars to create vaccinations? How about you have these people, these pharmaceutical companies make a ton of money, and the majority of the profit they make is because of the tax benefits you as a Congress give them. Okay, I'm not saying that's bad, but please don't say that the rest of us business owners need to pay more. The people who made decisions in their life to earn a better income and sacrifice and do things that to where they are able to be compensated. You made decisions as lawmakers to become lawmakers, and you're making money, building wealth, and becoming millionaires off the backs of the public. So please don't tell us business owners that we have to pay for all this stuff, and it's our responsibility. It's your responsibility to stop spending money. It's your responsibility to be good stewards and fiduciaries of our money, and you're not. For individuals, top marginal tax rate would rise from 39.6 from 37. So that's not that big of a deal. It is if you're making over 400,000. They're going to start adjusting these the tax brackets to effectively allow this change to be effective. There's going to be a 3% surcharge for people who make over $5 million. Adjusted gross income of $5 million. Let's see here. Basic capital gains rate would rise to 25% from 20, so there's a 5% increase there. When combined with an existing 3.8 investment income, this surcharge tax, this is the Obamacare, the net income, investment income tax, the 3.8. Plus, they're going to add another 3% to The surcharge, so cap gains is going to jump up to 38, almost 32%. Pass-through businesses. This is important. Listen to me. Pass-through businesses, which don't pay the corporate tax but instead pay taxes on their owners' individual returns, would be effective in several ways. They would face caps on the special deductions created in 2017, with individuals limited to 400 deductions and married couples to 500,000 in deductions. Okay, so you need to get the business protection programs to stay compliant. You need us to help you plan and design how do we stay compliant within these guidelines that are going on that are occurring. It's an attack on you. Those businesses would also no longer be able to avoid the 3.8% tax on their active business income. Currently, taxes of that amount would apply to wages, self-employment, and passive income, but not other types of income. Corporations would face a series of tax increases. The top rate would go to 26.5 from 21. So that's that 5.5 we were talking about earlier. So which they're saying, hey, it's lower than what Biden wants, but it's more than what we have now. So, okay, that's a happy medium. Okay. Notice none of this is talking about how they're going to stop spending and how they're going to be more responsible, how they're not going to start giving foreign companies our money, foreign countries our money, right? In fact, right here, companies would also face new limits on interest deductions and higher taxes on the foreign income. Notably, minimum tax on U.S. companies' foreign income that would go up from 10.5 to 16.6, below the 21% administration that sought. Okay, now companies, we're talking about this, they're talking about large companies, public companies. Okay, so Coca-Cola, Starbucks, Apple. Okay, they make about 40 to 60, 80% of their revenue outside of the United States. They're saying they're going to tax them more. Well, guess what's going to happen to the cost of products? It's going to get passed down to you and I as consumers. What's that called? Inflation. Okay, so yes, the government's going to get their tax revenue, but you and I as consumers, guess what? We're going to have to spend more and more money, which is going to push what? It's going to push incomes to have to be higher, which is going to push tax revenue to be higher. And you see the cycle of what this is going to occur. Okay, companies would be able to exclude an amount of equal to 5% of foreign tangible assets from the minimum tax, down from the current 10%. Let's see here. The committee also included a series of miscellaneous tax charges. That's awesome. Thank you. Now we're not even going to call them taxes. We're just going to say they're miscellaneous. Okay. It would reverse the doubling of the estate tax exemption that Congress created in 2017. Instead of that increase expiring at 2025, it would end after this year. Okay. The plan would also limit several estate planning techniques, including some use of grantor trusts and asset transfers with discount values. Okay. So we have some issues here. High income people with tax preferred retirement accounts totaling 10 million or more would no longer be able to contribute to those accounts and would face sharply higher mandatory distributions. They're going to increase distributions on these accounts, so it generates tax revenue. In a provision that would be retroactive to December 16, 2016, in a provision that would be retroactive to December 2016, the legislation would limit deductions for certain land right donations called conservative easements. The government has been attacking those donations in court, arguing that promoters are using inflated values to generate and sell tax deductions. The plan would also accelerate higher taxes on corporate executive compensation and impose higher taxes on tobacco products. The IRS would get nearly $80 billion over a decade to beef up enforcements. This is what we've been talking about in our other articles. The IRS is getting these monies to do what? To double the size of the tax agency. What they're focusing on is what? Audit teams. They're going out and auditing more. Okay? Then that's what they want to do, is they want to generate more and more tax revenue. It makes sense. With all this stuff and all the changes, the IRS is in a frenzy right now. They're so backed up. There's so much craziness going on. And all these changes are causing even more issues. Okay. The measure does not include some tax breaks. It would delay in tax increases slated to start next year. So anyway, so you got to get the idea. Lots of changes again on the horizon. The majority of them are affecting you. They're attacking you. They're coming after you. You made the decision to risk and go to business and decide to start a company and sacrifice whatever you've been sacrificing. And apparently that makes you privileged. then that makes you somebody that you get to have the opportunity to spend or pay more in taxes. And so this is a big issue for us business owners. We got to prepare and plan for this. It's not going to stop here. It's going to continue. Don't be surprised if the 400,000 and the 450 income levels eventually drops. This administration still has 3 more years. They can make changes at any point in time they want, and in these next 3 years. So don't be surprised if you see that. They're using that as a test line. They're going to slowly go down. They're worried about the middle class. They're not worried about the middle class. They're worried about themselves. They're utilizing the lower class, quote unquote, lower class, to effectively make themselves as lawmakers more money, and we're paying for it. So anyways, like I said before, if you like this content, you like this information, if you want more information, reach out to us. We're here for you. We're a consulting firm that help business owners protect your business, keep and help grow your wealth, and within the guidelines that the IRS lays out. So all the stuff that you're hearing, we have plans to help support you and help you be able to effectively address these issues that are coming down. Again, these are proposed changes. It could be different, but if with this current administration, there is no longer smoke. It is just fire. It's how big that blaze is going to get. It depends on what they decide they want to do. So thanks so much for listening, and we look forward to talking and chatting with you soon.